You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 19th day of May, 2026. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first broadcast is our live training room. That one's reserved for members only and those taking their 1-week free trial. This broadcast, on the other hand, is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways you can join this afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com. Scroll down the page to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day you'll get an email about an hour before the broadcast starts. In the email there will be a link. So at 12 noon Eastern, all you got to do is click the link in the email and it automatically logs you into our platform. The benefit of doing it that way is you immediately have access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from the desktop, but you still want to join live. And some days you'll be busy, so you can't join live, but you want to get caught up later. You can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. That's the Christian Financial Radio Network since 2005. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there's over 3,000 daily episodes archived for your educational and viewing pleasure. And if you're new to our neck of the woods, it's a great way to get to know who we really are. Thanks to the power of YouTube, you can scroll back 6 days, 6 weeks, 6 months, 6 years, even more, a lot more. Now, obviously, you're not going to watch them all, nor do you need to. However, if you decide to stick around, again, it's a great way to get to know who we really are, because it allows you to see how we've evolved over all these years, day by day by day. youtube.com/CFRN. On the left side of the screen is our schedule for each afternoon broadcast. At the top of the hour, roughly 1 p.m. Eastern, Michael will join us for a recap of what happened this morning in the live training room, and then do a little live trading as time and the markets permit. Right now, we'll dive into our daily devotional, which is where we start each and every afternoon broadcast. The topic that we're on right now, we've been on it for about a month and we're pretty close to wrapping it up. Everyday faith. Today's scripture happens to be the shortest scripture in the entire Bible. John 11:35. Jesus wept. Again, John 11:35. Shortest verse in the entire Bible. Now, the shortest verse in Scripture carries more weight than its length suggests. Jesus stands at the tomb of Lazarus. He knows what he's about to do. He's already declared that this sickness will not end in death. He's already told Martha that he is the resurrection and the life. And yet, when he sees the grief around him, he weeps. He does not rush past the moment. He does not dismiss the sorrow because he knows the outcome. He enters it. The one who commands storms allows himself to feel loss. The one who will call a dead man from a grave does not stand detached from the pain of those who mourn. He does not rebuke their tears. He joins them. Jesus does not weep because he is uncertain. He weeps because he loves. There are pictures of Jesus that are incomplete. Some imagine him as only gentle, never strong. Others imagine him as only strong, never moved. The Gospels refuse both reductions. He confronts death and feels its weight. He stands over the grave and still grieves what sin has done to the world he made. The person of Christ cannot be reduced to force alone. His heart is visible in his tears. His authority does not cancel his tenderness. As we follow him, we must both allow strength and compassion to grow within us. How has your picture of Jesus been incomplete? Let's pray. Jesus, show us your true heart. Correct what we may have misunderstood about you. Let your strength and your compassion reshape our own. It's in your name that we believe and pray. And everybody said, Amen. Amen and happy Tuesday. Wish I could tell you it was a turnaround Tuesday, but, well, if you've seen the charts, that's certainly not the case. I'll give you the numbers from around the world, then we'll look at some news, then we'll look at the alerts, and then we'll go to the charts. By then, it'll be time for Michael to join us. Starting here in the U.S. with the cash markets, or the indices as they're called, the Dow is down 255 points. NASDAQ down 276, a little over 1%. S&P 500 down 51. And here's the big one, the Russell 2000, our man in the street, is down 33 points, 1.25%. I mentioned in the live training room this morning that the Russell was leading the markets to the downside, and it still is. In the commodity basket, crude oil up 6 cents, trading 108.72 last. Gold down $45.50, trading 45.12 last. That's a drop of 1%. Silver down $2.59, trading 74.82 last. That's a drop of almost 3.5%. In the Asian markets at the close, the Nikkei dropped 265 points. Shanghai rose 38, which is almost 1% for the Shanghai. The Hang Seng gained 122. And in the European markets at the close, FTSE up 6, the DAX up 120, the CAC down 5. So we had a mixed day in Asia. It was a mixed day for the UK, but it's a big red Radio Tuesday here in the US of A. We knew this was coming, so no reason to get undone when we go to the charts. Maybe it'll make a little more sense. And you'll see basically where we're headed. The Justice Department yesterday announced a $1.7 billion taxpayer-funded program to compensate individuals who claim the DOJ politically targeted them under Biden. The figure appears to be a nod to America's founding year. Payments will come from the Treasury's Judgment Fund, an uncapped account used to settle federal cases. The Anti-Weaponization Fund is part of a settlement resolving President Donald Trump's $10 billion lawsuit against the IRS over the leak of his tax returns, along with civil claims tied to the Russia probe and the search of his Mar-a-Lago residence. Trump and his family will receive a formal apology, but no monetary damages. The tax case stems from disclosures by a former IRS contractor who was sentenced to prison for leaking high-profile figures' tax data between 2018 and 2020. A 5-member commission appointed by the Attorney General and removable by Trump will oversee claims through December of 28. The fund is modeled after an Obama-era program that compensated Native American farmers for discrimination in federal lending programs. NextEra Energy, we talked about yesterday, that they had announced plans to acquire Dominion Energy in a $66.8 billion all-stock deal pending regulatory approval. This combined company would form the U.S.'s largest regulated electric utility company and the world's largest by market value. NextEra provides electricity to roughly 12 million people in Florida. Dominion serves 3.6 million homes and businesses across Virginia and the Carolinas, including what's called Data Center Alley, the world's largest concentration of data centers. As AI companies rely on higher computing power, electricity demand is expected to grow. U.S. power prices are up 40% over the past 5 years. One analyst found the NextEra Dominion deal would further drive up costs by creating a larger company that is more difficult to regulate. The companies are offering $2.3 billion in credits to Dominion customers over 2 years, amounting to a roughly $562 payout per customer. Federal court yesterday rejected Elon Musk's lawsuit over OpenAI's decision to become a for-profit company. The court did not rule on the merits of the case, instead finding that the statute of limitations had expired. Elon Musk filed a lawsuit in 2024, but the jury found he was aware of OpenAI's commercial ambitions as early as 2021. Musk co-founded the AI company in 2015 as a nonprofit with the stated goal of advancing digital intelligence for the benefit of humanity rather than profit. After investing roughly $38 million in OpenAI's early years, he left the board in 2018 over strategic disagreements. Fellow co-founder Sam Altman became CEO in 2019 and began securing roughly $13 billion from Microsoft, a move that Musk claims caused OpenAI to stray from its nonprofit mission. OpenAI converted to a for-profit structure in October and is reportedly preparing for one of the largest ever initial public offerings at a $1 trillion valuation. Now, I posted something in the Breeze channel here in the past hour, and I put a note in. This is a paid advertisement, so take it with a grain of salt, but I encourage that you take a look at it and forget that it's an advertisement and judge it based on its own merits. I'll read you a little bit of what it says. Most people brushed off Apple's new Starlink integration for iPhones, but a company called Mode, M-O-D-E, Mobile, saw something bigger. Billions of new users suddenly within reach. Mode's Earn operating system already reaches 490 million plus users that have earned and saved over $1 billion, and that's before global satellite coverage. With SpaceX eliminating dead zones, Mode's earning technology can now reach billions more in unbanked and rural populations worldwide. Their global expansion is perfectly timed, and investors like you and I still have a chance to invest in their pre-IPO offering at 50 cents a share until May 29th. There's a lot of caveats there. There's a minimum investment amount. You can come in at different levels. I'm always a little skeptical of companies that feel like they need to advertise their IPO. So look at it, watch the video, visit their website, and don't fall for the sales pitch. If you're going to fall for something, fall for the technology and for the potential. I have yet to do a full investigation of the company myself or its stock structure. Maybe it's one of those Carl Sagan stocks with billions and billions and billions of shares, or maybe it's not. I don't know. Again, the company is Mode, M-O-D-E, Mobile, and you can find that video I'm speaking about in the Breeze channel in Telegram. Moving to the Wall Street news. Tech stocks led U.S. markets lower today, resuming a pullback as investors weighed apparent signs of progress towards an end to the U.S.-Iran war. Yeah, I don't see that. Rising Treasury yields continued to put pressure on stocks as the benchmark 10-year rate climbed above 4.6% again early this morning. Worries about higher inflation have lifted bond yields as blockades in the Strait of Hormuz spurred a rally in oil prices. Wall Street is debating whether the Federal Reserve will hike interest rates to get inflation under control. Maybe they haven't figured out that don't work. That's seen as putting the appetite for growth stocks at risk, with high-flying AI stock valuations particularly in focus. Boy, I'll tell you what, at the first Fed meeting, if Kevin Warsh has to raise interest rates, Trump is not going to be a happy camper. All right, this article comes to us via Yahoo Finance. Yahoo Finance unleashes alpha space. Here's how you can use it. Here's how you can use it to prepare for Nvidia's earnings, which come out on Wednesday. Listen up. I've covered Wall Street and investing for 24 years. The first 10 as a spreadsheet using number crunching stock analyst. Now this is somebody else writing this, not me. I've talked to billionaire CEOs, analyzed tens of thousands of earnings reports, and sat through equally as many earnings calls. And I can tell you this, full stop. The number one thing holding everyday investors back is not their instincts. It's their tools and access to actionable information. Costly platforms with hard-to-understand interfaces. Well, those are for Wall Street insiders with a bottomless wallet. Don't even get me started on other platforms I've used over the years that charge big-time money, but come up lacking on data and actionable insights. I think he's referring to the Bloomberg terminals. The big guys have always had the advantage in the market until now. Yahoo Finance has just dropped alpha space. One word. I'm not playing around when I tell you this changes everything for the average investor trying to make sense of the market and build generational wealth. Advanced charting, real-time fundamental analysis, portfolio tracking, premium news, stock research, direct access to Yahoo Finance's live stream, which is like getting direct access to yours truly. AlphaSpace gives you all of this in one intuitive, customizable platform. It doesn't reset every time you close your laptop. Your research stays, your context stays, your investing edge stays and grows. And it's powered by our all-new Yahoo Scout, AI that works with you, not over you. Ask it a question, build a chart, modify your whole workflow. I've been deep in testing on AlphaSpace with the Yahoo Finance team for months, and I can tell you that you will not miss a beat in the markets. This is professional grade firepower, the stuff hedge funds pay thousands of dollars for $39.95 a month. And they're offering a 7-day free trial. Now, I know that also sounds like a commercial or an advertisement, and I guess it is. But I just want to make you aware of it. AlphaSpace, $39.95 a month, 7-day free trial. It's worth taking the free trial. Just put a post-it note on your computer to cancel it in 6 days. Unless you like it and you think it's worth it $39.95, well, then go for it. From Bloomberg, yields on the U.S. Treasury's longest dated bond rose to the highest level in almost 2 decades, as investor concern over accelerating inflation fuels a sell-off across global debt markets. From Reuters, the Trump administration is not in a rush to extend a tariff and critical minerals trade truce with China that ends in November, as there is time to renew it in meetings later this year. This is according to U.S. Treasury Secretary Scott Bessent. Bessent told Reuters this morning in an interview on the sidelines of a G7 finance meeting that he believes China will accept the restoration of prior U.S. tariff rates through new Section 301 duties, as long as they don't go higher. China had in recent months gotten a deal on lower tariffs, as a result of the U.S. Supreme Court's decision striking down President Trump's global emergency duties. Huge mistake. Bessent said of the November 2025 tariff truce, "I think we're not in a rush to extend it. Things are stable." He added that China has been satisfactory but not excellent in terms of their fulfillment on their side on critical minerals, so we're seeing them again. Chinese President Xi is expected to travel to Washington to meet President Trump at the White House in September. Prior to that summit, Bessent said that he will meet with his counterpart, Chinese President He Lifeng, to work out more details on trade matters. And gold continues its decline as persistent concerns over inflation fueled bets that global central banks may be forced to hike interest rates. Silver slumped to the lowest level in nearly 2 weeks. Elevated energy prices have stoked inflation fears, raising the risk that the Federal Reserve and other central banks may need to keep rates elevated rather than deliver the cuts investors had expected before the U.S. and Israel launched their war on Iran. Lower rates benefit bullion, which doesn't carry interest. Well, we got a new Fed chair. We'll see what happens. A socialist group with ties to a China-based financier is setting up indoor hubs for radical activism in neighborhoods across the U.S. The Party for Socialism and Liberation has at least 28 event spaces, often called Liberation Centers, open since 2021 or in preparation. The organization uses the centers to cultivate revolutionary thought and attract new local followers while organizing protests against foreign policy decisions and law enforcement. Talk to anyone who's ever lived under a socialist or communist regime and, well, just do it. Ask them, does it work? We all know that it doesn't. It just doesn't work. Eventually, you run out of other people's money to give away, especially when you chase them out of your city and your state, as we see happening in New York and California. Perpetrators of the violent teen takeover in Washington, D.C. that got a federal prosecutor's attention were concealing their faces despite the district's 2024 mask ban. Viral videos of young people hitting one another with chairs, throwing punches, and standing on tables at a D.C. Chipotle restaurant on Saturday show multiple participants in the brawl wearing masks with hoods. A 2024 D.C. law bans wearing face coverings during a dangerous crime or crime of violence, despite Black Lives Matter supporters' past efforts to scrap the restrictions. Of course they want to hide their face. Judge Janine, she's on the case. She's going after them. And she's going to prosecute the parents. Parents that let their kids run amok, you're going to pay a price. Democratic New York City Mayor Zohran Mamdani flipped a famous Ronald Reagan quote on its head to justify government-controlled grocery stores in a Monday speech. The former anti-communist Republican president was wrong to say in 1986 that the 9 most terrifying words in the English language are, "I'm from the government and I'm here to help." Mamdani told supporters while announcing an upcoming city-run grocery store in the Bronx. The power of government will help deliver New Yorkers from the city's economic woes. This coming from a socialist mayor. Never had a real job. All he knows how to do is spend other people's money. And his parents are rich. So if this whole mayor thing doesn't work out, he's already publicly said it. He'll just live off their money. He goes on to say, I think the 9 more terrifying words are actually, I worked all day and can't feed my family. So Mamdani says we're going to use the power of government to lower prices and make it easier for New Yorkers to put food on the table. When government understands its purpose as serving the very working people that it has left behind time and again, it can make a difference in the most pressing struggles facing our city today. It's not just that government can help, it's that government must help, and our government will help. Tell that to anybody living in Cuba right now. What a clown. How in God's name did the people of New York elect this man to office? Anti-Semite, pro-Palestinian, he's not a social, he's a communist. And the people of New York elected him. Anyway, we'll end the news on a positive note. Country music sensation Ella Langley tearfully thanked Jesus during her acceptance speech at Sunday's 2026 American Country Music Awards. She received wins in 5 categories and praised Jesus and God while on stage. She said, "Thank you, God, for putting me in a room with these 3 people right here." Taking the stage again, Langley was overtaken by emotion and credited fellow artists Lainey Wilson, Miranda Lambert, and Kelsey Ballerini for their support. "I'm trying to get to say something, but I can't," she began. "Today I was having a strange day. I don't know what it is about awards. I walked right into Lainey's room and I just got emotional, and she hugged me, wrapped me up, and started praying for me. And then all of a sudden, here comes Miranda Lambert in her little pink hat. And I would not be standing up here without the encouragement of so many women. Kelsey, thank you so much for loving on me," Langley said. The country music star thanked her family for being by her side throughout her career and turned the focus on her faith in a moment of gratitude and appreciation. See, that's what we need more of in America today. Not more Newsoms, not more Mamdanis. All right, let's look at Logic 247. That's our 24/7 around-the-clock E-mini alert service. It's not just E-minis, but also crude, gold, and silver. We're currently in week 407. Over the last 407 weeks, we've issued over 22,300 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based simply on market structure. A simple process we teach all of our passport holders. I did not put any alerts out Sunday night. Normally I hit the ground running as soon as the markets open Sunday night at 6 p.m. Eastern. That is the beginning of the Monday session. But I had some technical difficulties, and so it was last night before I put any alerts out. In fact, I put out exactly 14. Now, Valerie did the recap this morning at 6:30 a.m. Eastern, so she'll update the recap this afternoon as she does each and every day. At the time she did the recap, we've issued a total of 14 alerts. Not since the market opened Sunday night, but since the market opened last night. There were no alerts Sunday night. At the time of the recap, we were still waiting on the outcome of 5. But since I posted these alerts last night, we had 9 actionable alerts. And so far, no stop outs. That's a good thing. Last week, week 406, last week, week 406, we issued 75 alerts, 16 never triggered. That gave us 59 actionable alerts, of which 4 or 7% would have been stopped out. Again, based simply on market structure and the simple process we teach all of our passport holders. Now, week 405 was a historic week. We issued 71 alerts, 24 never triggered, 47 actionable, no stop outs the entire week. It's the first time that's happened in 7.5 years. But we're off to a good start this week. Now, the purpose of the logic alerts is to help you learn how to read a chart. Every logic alert has an entry price, long or short, an initial target, in most cases additional targets, and then always a final trade to target. The logic alerts can come out any time around the clock, 2 a.m. or 2 p.m. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. If you never actually trade a logic alert, you can still use them while they're available to learn how to read the chart. And if you want to learn how to trade for a living, then you need to learn how to read a chart. So I'll stand and deliver every day until I don't. Now, Logic 247's have been around for 407 weeks, which is a long time. However, years before we introduced Logic 247, we had our original alert service, the concierge trade alerts. They're different in a lot of different ways. But for the purpose of this discussion, I'll just say this. They don't come out around the clock. Typically, they're posted 5 minutes ahead of the Globex open. But last night, I let everybody know I was running late. I didn't get them out until 6:15. They normally come out at 5:55 p.m. Eastern. I got tied up at an appointment, and then I rushed home and got them out as quick as I could. So, 15 minutes after the market opened, all of our traders had all of these targets. The S&P 500, the Dow, the Russell, crude oil, the NQ, gold, and silver. We're going to go through each one of these individual charts. You'll see these targets drawn out on the chart. Just remember that all of our traders had those targets 15 minutes after the market opened last night. The Tuesday session we're in began last night at 6 p.m. Eastern. The Tuesday session will end today at 5 p.m. Eastern. The Wednesday session will begin tonight at 6 p.m. Eastern. And God willing, the alerts will go out on time at 5:55 p.m. Eastern. So let's go to the daily chart of the S&P 500 E-mini futures, where we start each day with the charts. We're well off the low of the session. That's refreshing. What did we run into? Anything? Anything significant? Not really. This low right here was potential support. In this area that I've highlighted right here, where the black step line crossed back to the left side of blue and climbing, that's a major support area, which is now aligned with the daily BBC. Here's the 24% fib retracement. A price always reverts to the mean. In our case, the mean is green. It's called the BBC. Just stands for bull bear cross. When price crosses below the green line, we're bearish and expect lower prices. When price crosses above the green line, we're bullish and expect higher prices. It's pretty simple. However, price always reverts to the mean, and the pullback holds more often than it doesn't. But eventually, it will trade through, as it did here on April 8th, and was confirmed April 9th because we had a candle that both opened and closed above the BBC without physically touching it. See, on this day here, we closed above, and on this day we closed above, but we were still physically touching. We need a candle that both opens and closes above or below to go from a bearish to bullish bias. Now, back here, the step line crossed blue and climbing, and that typically leads to a retracement to the BBC. That's a heads up that price is about to revert to the mean. Well, we got it again. Yesterday, the market found resistance at the black step line. Number one, when the black step line crosses blue and climbing, that tells us we're going to retrace back to the BBC. Except when it doesn't, which is rare, extremely rare. Now we're making that cross for the second time. We've already taken out yesterday's low, but we're well off today's low. Today's low was 73.54 and a quarter. And we're currently trading 73.92 and 3/4. Could be potential support here around 73.38. This is the one. Now the fact that this is aligned, okay, with the daily BBC. Now keep in mind, that would be a very shallow retracement. Even if we spike the daily BBC and hit the 24, a 24% Fib retracement, that's barely a breather. What the market's calling for is a much deeper retracement. Perhaps the 38. You'll notice that's right where that step line crossed the first time, and we didn't get the pullback. So that's an important price, important area for two reasons. We got the 50% retracement, the 62.
Arizona is home to over 800 species of wildlife, but only one agency is dedicated to conserving and protecting all of them. The Arizona Game and Fish Department is home to over 800 species of wildlife, but only one agency is dedicated to conserving and protecting all of them. The Arizona Game and Fish Department actively manages our wildlife populations for today and for the future.
Some ad just started playing on some web page I have open. Anyway, I closed that page, so that was weird. What does the pullback hole mean? It means when price pulls back to the BBC, the pullback holds more often than it doesn't. Yeah, let's scroll back. Here's the ES. Price always moves in legs. Leg retracement, leg retracement, leg retracement, leg retracement. As you can see, every time price pulled back to the BBC, the pullback held, 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 until it didn't. Pullback holds more often than not, whether it's pulling down from above or pulling up from below. Pullback held, and the pullback held, the pullback held. And then right there, you had a little head fake. We had a candle open and close above the BBC without physically touching the BBC. That would lead one to think price was heading higher. And then we got a bearish engulfing candle. And that all happened back on Friday. And this gap lower open that you see is not accurate because the DT Pro charts didn't kick in until 11 p.m. Eastern Sunday night. So the markets actually went lower. But you had a leg and a retracement, and the pullback held. And then price made it through the BBC, and the pullback held. And the pullback held until it didn't. Once we got below the BBC, then the pullback held, and the next pullback held, and the next pullback held, and then we finally traded through. We had a candle open and close above the BBC, so now we're expecting higher prices, and we ran right into the weekly trading zone. I'll be pointing those out as we go through each of the individual markets. Now the vertical line right there separates today Tuesday from yesterday Monday. This is not a full chart of Sunday night Monday for the reason I just mentioned. But last night we did open on time. Now, the horizontal lines are the weekly trading zones. We've published those every Monday for our members since December 14th of 2009, over 16 years. The idea behind the zones is when price rallies up to a zone, we expect resistance until proven otherwise. When price drops to a zone, we expect support until proven otherwise. So we opened here last night, ran up to the zone, found resistance. When the market finds resistance, it's going to go look for support. It found it briefly here at the BBC, and then we got below it, but the pullback held, and it sent price right down to the short CTA. Now, the long target was based off yesterday's high. The short target right there was based off where red turned to blue yesterday. And as you can see, price pretty much hit it to the tick. Now, when the market finds support, it's going to go look for resistance. Now, right there where blue turned to red, I would have expected that to be good resistance. We didn't quite get there. That's a sign of weakness. And look what happened. We dropped below the BBC. We hit the short target again and again and again. And then we pulled back to the BBC and the pullback held. So then we get another leg and a retracement. We don't know if this pullback's going to hold yet or not. There is still 12 minutes left in the life of this candle. So even if we close above the BBC, if this candle, it is going to be physically touching. So we won't know until the next candle. If we have a candle open and close above the BBC, or a candle open and close below the BBC, then, well, if the pullback holds, we'll just get another leg to the downside. Hang on, I'm responding to a message. Yeah, it looks good, Paul. All right, so right now we're at a very important inflection point. When price trades through a CTA target on the retracement, and that's how price always moves. This is very important to understand. Leg retracement, leg deeper retracement, leg retracement, leg retracement, leg retracement. It's just how price moves. It's how price works. Now, when price trades through a CTA short target on the retracement, the underside of that target can often become good resistance. And that may be exactly what we see happen here. Again, we won't know for another 10 minutes because there's 10 minutes left in the life of this 30-minute candle. All alerts are created on the 30-minute chart, the Logic 247 alerts and the Concierge Trade alerts. So we found resistance at the zone, support at the target, support at the target, resistance at the BBC, and it looks like we're going to end up with resistance here. And that will lead to most probably another leg to the downside. Now if we scroll left, these lows right here. Now again, I don't know exactly, based on this chart, I don't know how far we dropped Sunday night. I think it was down into this area here. But we could take a look and see. All right. So the low Sunday night off the open $73.75. So we actually took that out. So this support came in at an area just above where I would have expected support. All you got to do is look left. People always say, how far left do I have to look? As far as you need to. This candle may close above the BBC. We now got 8 minutes left. We'll look at this again before the end of the broadcast. On the Dow, here's where we opened last night. And off the open, we failed to take out yesterday's high. That sent us back to the weekly zone and the BBC. That's support times 2. Remember, when price drops to a zone, we expect support. When price drops to the BBC, we expect support until proven otherwise. Only one of 3 things happens when price encounters a zone. 70% of the time, it's this consolidation. 20% of the time, it's rejection. 10% of the time, the slice. That's when a 30-minute candle slices through a zone like it's not even there. When that happens and the move runs out of steam, price will typically retrace back to the zone it sliced through and then continue in the direction of the slice. All right, so we had the long target based off yesterday's high, which was 49,845. And the high of the session was 49,838. So we missed it by just a few ticks. So then we go back to consolidating at the zone. We get below the BBC, leg retracement, pullback held. And then here's the opening candle on Wall Street, and that spiked the short target. Now the short target was based off this low, and this line that I drew in yesterday was based off this bullish cross. A bullish cross is when the blue line gets above the green line and leads to an extended move. The first time price revisits that area, as it did yesterday, will almost always be good support, and it was. Now, I drew this line in yesterday during the afternoon broadcast. But yesterday's broadcast ended at 1:45. This happened at 2:30. So I drew the line, and it became a self-fulfilling prophecy. Price got to the bullish cross and reversed. So the first time down, you should always expect it to be good support. Does it happen every time? Nothing happens every time. 8 out of 10? Sure. So this was the opening candle on Wall Street. So no surprise that we spiked that area. And we actually ended up green. But as you can see, the pullback to the BBC held. And so far, this pullback to the BBC is holding. Leg retracement, leg retracement, leg retracement, leg retracement. Over and over again and again, that's just how markets work. Leg retracement, leg retracement, leg retracement, leg retracement. On the Russell, here's where we opened last night. Now, this bearish cross from yesterday, that should have been good resistance, and it was. The first time up, we stopped us right dead in our tracks right there. Repeated attempts, we did manage to spike it just a little bit, but look where we closed. Then we get below the BBC, leg retracement, pullback hill. Leg, hit the short target, retracement, pullback hill. Now you might say, well, gee, those candles are way above the BBC. Yeah, but they're physically touching it. So leg retracement, pullback hill. Leg retracement, leg retracement. So far, the pullback's holding. The pullback holds more often than not, but eventually it will trade through. On the NQ, just where we opened last night, and we ran into the bearish cross from yesterday. We spiked it a little bit, and then down we go, right to the short target, which was based off this right here, where red turned to blue yesterday. Market found support, and then when it ran up, it didn't quite get to the area I would have expected resistance, right there. That's a sign of weakness, and sure enough, the market went back to the short target, consolidated for hours, the pullback held, and then we dropped to the zone. Remember, when price drops to a weekly zone, we expect support until proven otherwise. When price rallies up to a zone, we expect resistance until proven otherwise. So support held at the zone. We closed above the BBC. This candle is physically touching. So we need a candle to both open and close without touching the BBC. And then we can go from a bearish bias to a bullish bias. Right now, we got a high, a lower high, a lower high, and a lower high. And that is the definition of a downtrend. Crude oil, here's the open last night. We got above the BBC. We expect higher prices. And off we go right up to the long target, which was based off where blue turned to red. Then we hit the zone, resistance, which sent us looking for support, the pullback hill, which sent us to resistance, and then the pullback hill, which sent us to resistance, which sent us back to support, the pullback hill. And it's just been a game of pong between the weekly trading zone at 104/105 and the BBC. So the pullback held, the pullback held, the pullback held, the pullback held, the pullback held. Eventually it's going to trade through. Or we're going to make a move higher and try to take out the high of the session, which came in off of the Wall Street Open today. Then we got to look left to this high from yesterday. See, the fact that we failed to take this high out from yesterday, right there, that is a sign of weakness. And then your next potential resistance will be this high right above it. Gold. Here's where we opened. We ran up. We hit the long target. Now this one candle right here opened at 45, we'll call it 79, and it ran up $900 per contract traded to the long target. When the market finds resistance, it's going to go look for support, which it found at the short target. And we got a little bit below it. If we look across here, this took out all of the potential support. And this was the low of the session. So from the high of the session up at 45.93, we dropped all the way down to come on, 44.67. All right, we got one more market to cover. Silver, we'll do that when I come back. Right now, Michael's going to give us a recap of what happened this morning in the live training room, and then do a little live trading as time and the markets permit. Then I'll come back, finish the recap, and wrap things up with our good word for today.
All right.
All right, looks good.
Yep, good.
Everything looks good.
All right, here we go. Yeah, here we go. Good afternoon, everyone. Today is Tuesday, the 19th day of May, 2026. Now, if you have not taken a free trial with us and you want to, go here to mytradingiq.com, click on the purple button right here. There's no credit card required for the trial. Click on that purple button, and it will bring you to this registration page where all that we ask for is your name, your email, and your phone number. And then down at the bottom, give us your TradingView login ID. Right? Once you give us that TradingView login ID, we'll be able to get your indicators indicating on your desktop for you. Okay, hit the register button, and we'll know that you did all that. All right. Recap. We had a pretty good day today. It was better than yesterday. Wasn't as good as the day before, but it was still a good day. We had plenty of trades, which was good, which is nice. And sort of getting back to the normal volume of trades too. We had 31 trades today, 28 yesterday, 30 the day before. It's like things have started to pick back up. Anyway, if you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today we made 94 ticks on the NQ, 92 ticks on the Russell, 10 ticks on the YM, and minus 4 ticks on the ES. That put us at plus 930 per contract this morning. Today it took 13 minutes and 2 trades to get to $1,475 with 10 contracts on, and we took a total of 31 trades overall with 6 stop outs today. So that put us at 80.65% of our trades were break even or better. On the month now, we're at $7,222 over 12 business days, averaging $601 per contract per 2-hour business day. The year, we're now at $86,275 over 82 business days, averaging $1,052 per contract per 2-hour business day. Now, if you were to quit trading when you get the goal for the day and add 1 contract per month, so far this year, you would have only had to work 12.26 hours. And you'd be up, if you had everything exactly the same as me, all the fills everywhere, slippage, everything else, you'd be up $33,882.50 just on trading up to 5 contracts right now and only trading until you got the goal for the day. That makes an average of $2,762 per hour. Okay, $2,762 per hour. All right, so let's get into it. On the Russell. Let's just go back to the beginning here. We had a good day on the Russell. At one point today, I just looked at the Russell because it was doing so well and it seemed to be just pumping out trade after trade after trade. So our first trade of the day was actually here on Russell. We picked up 5 ticks there, and then a few minutes later we picked up another 6 ticks here for 11, and then another 5 to get us to 16, and another 5 to get us to 21, and then finally we got more than 5. We got 10 to get us to 31. I think, no, 21. I'm sorry, we got 30. That's right too. This is where that screwed up thing happened. I got 30 on one of those and 16 on the other. And so that brought us up to 51 and then 67. And we went from 67 to 72 right there. That was another 5-tick trade. And from 72, we went to 87. So that was a 15-tick trade. And then from 87 to 92. So that was a 5-tick trade at the end. Well, the markets have shown some really nice leg lengths right here. Did we have any trade setups in there? No, we did not. All the way back to here was one. That didn't actually hit the mid-band on the pullback. There was one that would have stopped out. That didn't hit the mid-band or it would have been a trade. That didn't hit the mid-band or it would have been a trade. So this big leg up right here, we didn't get any, sadly. But that was it for the Russell. We were up 92 ticks overall on the Russell. YM. Let me get out the question box. I forgot to take out the question box. So in here, you guys don't ask that many questions. I think Nate, you asked that of Dwayne earlier. And that applies across all markets and all time frames. Nate. Okay. I figured you did, yeah. Bob Z just said SpaceX is launching today. I don't know if he means it's going public today. That would be a surprise. I just got a message that said SpaceX is launching today. I didn't think so. Maybe it's launching something else, like a rocket. Yeah. Okay. That's what I thought. A 5-to-1 stock split already? Because the price is going to be so high. Wow. That's craziness. I've never heard of that. A 5-to-1 stock split before it's even public. They didn't do that with Facebook or any of those other ones. When Facebook went public, it was a mess. Remember? Wow. Yeah, they're not going to get any retail. Interesting. Interesting. Yes, yes, indeed. All right. Well, on the YM, we only had a couple of trades. We had that one for +5 and that one for +5. And that was all that I had on the YM today. Not a big day on the YM. It doesn't have anything here, and during the break, it had a trade there that would have worked out well. It had a trade there that would have stopped out, a trade there that would have worked out well, and that was pretty much it. So 3 trades during the break. The ES kind of had my number today. And if I go all the way back to the beginning on the ES, let me see if I can hit the control back on this again. And yesterday when I did this, it kept choking on it. All right, so on the ES, we started out okay. We really did start out okay. Our very first trade, we picked up 16 ticks, right? No, 11 ticks. I'm sorry, I picked up 11 ticks on the first trade, then 1 tick on the second to get us to 12, and then 4 ticks to get us to 16, and then the wheels fell off. There's some nice trades in here. I don't know what I was doing. I didn't get those trades. But there's some nice trades that happened in there. And we went from 16. I had something here, some kind of a gain there, but I didn't count that. Then we had a break even, or maybe that was a stop out, because we had a break even, and then the stop outs started coming. And we stopped out and we went from 16 down to 6, and then 6 to, we had a break even, and then from 6, what the heck? Where are all the stop outs? All right. Well, let me just tell you what happened. We went to 16, and then I had that one that was in blue that I think was actually a stop out. That probably should have been a red one. So let me make that red. That makes more sense. So we went from 16 down to 6. Then we had a break even. Then we went from 6 to -4, which was the next stop out. Went from 6 to -4. And then from -4, we went to -14, which was the next stop out that I don't see listed in here. And then went from -14 to -4. So we had a +10 somewhere to -10. We had what did we have? We went from -4 to -14. So we had a -10 somewhere, and then we had -14 to -4. So we had a +10. So there was another stop out and then a +10 somewhere that I didn't mark. But anyway, that was the ES this morning. Looks like during the break, it had a trade right here that would have been a break even. A trade right here that might have stopped out to the tick right there. Might have. A trade right here that would have been a nice trade. A trade right, that was not actually a trade. A trade right here that would have been a nice trade. And right here, that would be the final trade of the morning right there. And that was it. We ended up with a -4 on the ES today. Okay. If we get a down close here, followed by an up close, that will be another trade on the ES. So I could, well, I'm just going to do the NQ. We were up pretty good on the NQ at one point today. We had a couple of 50 tick trades in there. And I'm going to do the control back thing again. Hold on. Okay. All right. So on the NQ, trying to get to our first trade. I think our first trade was a +11. Wherever that was. There it is. So our first trade was a +11. Then the next trade was a +50. That got us up to 61. Then the next trade was a plus. That was kind of a. I had a +3 that got me to 64, and then we had kind of a stop out here. It was supposed to have gone to break even, +10, but it ended up slipping me, I think, a lot. And it wasn't a full stop out, but it was a 10 tick stop out, it looks like, or 11 tick stop out. We went from 64 down to 53. And then the next trade, we went from 53 to 63, right there. And then we stopped out on the one after that, right there. That brought us from 63 down to 27. Then it's 28. So I was getting a ton of slippage today on the NQ. That 28 should have been a +10. It was a +1. Then the next one went from 28 to 36. So that should have been a +10. It was a +8. And then we had a big trade. We went from 36 to 78. So that was supposed to be a 50 tick trade, and it wasn't. They went from 78 to 86, and 86 to 96, and 96 to 130. That was supposed to be a 50 tick trade too. I think this one right here. It's supposed to be a 50 tick trade, but it didn't quite make it. And then this one here, we stopped out, went from 130 down to 94, and that is where we ended it on the morning session. So there were ample trades this morning. There was a bunch of trading going on this morning, and I missed a bunch. And here during the break, I'm just scrolling through and seeing a bunch of trades that triggered during the break. So hopefully we'll get some more off in this session right now. There's just not there, and not there, and not there. Going back to the last trade right here was the last trade. right there. Before that, there was one right here. That would have stopped out. Okay, let's just get in there. I think we're going to have some opportunity here. So let me do this. If you have not taken a free trial with us, go here to mytradingiq.com, click on the purple button. Purple button's going to bring you to this registration page. Just fill it out. Okay, fill it out, and that is it. All right, so Nate, I want to show you. It's inside the TIQ context is where the BBC lives. All right, the BBC is this guy right here at the top. Now, the BBC ribbon is the same location as the BBC. It's just got color attached to it. Okay, BBC ribbon is the leading edge of the ribbon. These other things that you see inside the ribbon, they are all the other pieces of the ribbon that you can see. Like, you know you're in a strong trend if you can see all 4 lines in the ribbon spread out like that. Now, the thing that Dwayne was showing you in the first pullback to the BBC usually holds. That's true for every time frame. Okay, if we look in here right now, and we just crunch this down, this is a 39 range. And if I just shut this off for a second, now the caveat is that it's the first pullback to the BBC after the MA1 BBC cross. Okay, so right here, when you have this cross, the first pullback usually holds. When you have this cross, the first pullback usually holds. When you have this cross right here, the first pullback usually holds. Okay, and it usually holds anyway, until it doesn't, obviously. But usually when it stops holding, you'll see that you're not getting higher highs anymore. You consolidate before it stops holding. You know, usually something like this will happen before it stops holding, and then it'll flip around and start going in the other direction. And we didn't really have a direction change in there until right here. So you go in the other way, it held right there, it held again, and it held again right there, but then it didn't put in a lower swing. See right there how it didn't put in a lower swing and it stopped trending. Then it flipped everything back. So when it stops trending like this, you don't expect it to hold anymore. All right, then it flips here, puts in a higher swing, comes down, puts in another higher swing. So you're still expecting it to hold. Every time you get a higher swing, you're still expecting it to hold. Okay, this is just a little bit higher swing from right here. If it doesn't pull all the way back like this, that shows there's strength in the market. Okay, let me draw it for you a different way. When price is going up and down like this, you know, it's pulling back. A healthy market pulls back 50% and continues up. If there's strength in the market, it's not going to pull back the full 50%. It's going to pull back just a little bit like that. And then if it does actually, if right after that, the next leg length is equal to the last leg length, that usually happens. I want to say it usually happens when the market's nearing the top. Okay. You have to look for the leg lengths after that. If you get a little short one like that, look for the leg lengths after that. You want to make sure that it's continuing in the trend. Okay. So like right here, when this happened, it changed directions right here. That's what this whole thing right here is a direction change. This is your first pullback. This is your leg length. You want to exceed that leg length. So from here to here, from there to there, did that exceed the last leg length? I think it did. So then you take that, and this is what you're working with, okay? This is what you're working with. You want to exceed that leg length. You see how this was just a little bit of a pullback, but it exceeded that leg length right there. So now you're working with this. Well, I have to draw another one for you. So now you're working with this, right? But you have this one that's your start leg length. You have, crap, sorry about that. That is the one that we just used. This was your original leg length. So now when it pulls back in here, this just does a little tiny pullback and didn't really pull all the way back down. But here it is right here. Now this is your leg length. This was the original leg length, but you had that big push up right there. That suggested there was strength in the market because it exceeded this leg length. It just doubled that leg length. It suggested there was strength, and then you had this little pullback right here that said there was still strength in the market. And so it kept going up, and it didn't exceed this. This whole leg length from this pullback right here did not exceed this last leg length. And it did the same kind of thing right here. That showed a little bit of, this actually showed a little bit of weakness when it pulled back in here, and it didn't exceed this leg length. So what happened if I draw it like this? It went like this. Then your initial pullback was 50%. Then it went up like this, and then it did that, and it did another push up like that. All right, and then it did a deep enough pullback to the 50% level. Right, exceeded that down to the 50% level of the whole thing from here to here. If I draw the fibs on it for you, I'll show you. The 50% level right there. Okay, and then what you would expect is this whole leg length to get exceeded right here. And it didn't do that right in here. Okay, well, it doesn't look like it did it. You know, if I take this piece right now, this piece right here, and drag it over here, you see it didn't do it. I guess it equaled it right here. It equaled it right here, and I think that's probably where it's going to fall apart. But you see how the market's always doing the same thing. It's always moving like this, and it's telling you, it's showing you things. There's like little nuances that the market's always going to be showing you that tells you where there's strength and there's weakness in the market. And you know, because we use range bars, everything is based on price action. You know, if you use any other kind of bar, like if you were to use a 5 minute or a 1 minute or something like that, it's always going to move to the next bar regardless of what the price is, because it's time based. It's not price based. But when you use range bars, you'll never get to the next bar if it doesn't move in price. So it's always based on price action. So this kind of stuff has to happen with range bars. And it's got patterns that it does. It's always doing the same type of thing. And you just have to recognize the patterns, right? You can see the weaknesses coming into the market when it fails to exceed the prior swing high. You can see that stuff when it starts to pull back deeper. You know, if price is moving up, like, you know, it starts off normal, right? And then the legs back get a little longer and the legs up get a little shorter. And the legs back get a little longer and the legs up get a little shorter. And then you just change your trend right there. You know, it can happen really gradually. It doesn't usually happen really gradually, but it can happen just like that. So if you know what to look for, you know when to let things run and when to let things, and when to take profits really quick. Okay. Every single trade you take should exceed the prior swing high. Every single trade you take should get to the prior swing high and find some resistance. Every single trade you take should at least get halfway. Okay, now, what I just said, that last piece that I just said, is when you experience a trend change and it's showing weakness. It happened a lot of times today where we were in a green background, but it was price action was looking like a short, where it changed directions. And now you still got a green background in this case. You still got a green background. You're still thinking it's going to be going long. But I would not be looking for it to get to the prior swing high. If it did this sort of thing, I would not be looking for it to get to the prior swing high. I'd be looking for it to get to the midpoint and turn down from the midpoint. Okay. And I say that when I see it, a lot of times, I say it's at the perfect spot to turn down right here. And, you know, there were times today where it looked like the perfect trade going in the opposite direction, but the background color wasn't in sync with it. Okay, that was a lot of talking. I just talked away almost all my time. I haven't taken a trade yet in this session of it, so let me get my DOMs out here ready to go. And here we are. All right, and it's Tuesday. I haven't even looked outside yet. What's it like out there? It's hot. All right, so right now we need pullbacks everywhere. So let's just look at the stuff that, everything that I just said. We'll look at the individual markets. Okay. Let's start out with the NQ. You see how big the pullback is here and how big this pullback is? You see how big this leg length is and how big up this leg length was? So this is a smaller leg length up with a bigger leg length down. See, everything I just showed you right here is happening right here. Okay. Let me draw it for you using this. So this was our leg length right here. Okay. And so you can see that this pullback right here is obviously bigger than that pullback right there. This was our leg up right here. Right now, this is exactly doing what I said. Right now, it is setting up for this to happen. I would expect it's going to get to the midpoint right here, right now. I would expect when it pulls back, it's going to get to about right there and push down. That's what it looks like to me. You see, this is happening right here. We got a little bit higher swing. But the higher swing came with the shorter leg length up and a bigger leg length down. So everything that I just said right here is coming together. And this is the beginning of a trend change. Oops. Let me draw that. Okay. So that's what it looks like on the NQ. Now, you have the same thing happening here on the ES. See, this was your leg length up. This was the pullback back here. This is a shorter pullback than that one. So that part of it's not showing. But this leg length up right here is tiny compared to this. And this pullback is huge compared to the last couple. So right now, the same thing is happening. We have a deep pullback. Now, if we were to crunch it up like this, if you use this whole leg length from here to here, this is a 50% retracement of that leg length. All right. So it's possible it's going to move up from right here and keep going, another leg length like this up. But my bet would be that it's going to find resistance right here and push down. Okay, now we don't have a trade set up for it anyway, so it's just speculation. But we see how the indicators keep you out of that scenario. They kept you out of it over here. They keep you out of it here. And let's look at the YM. The YM's got kind of a weird looking thing happening here. The same thing happened here on the YM, actually. This was a leg length up. This is a leg length down. This leg length here and that leg length there are exactly the same size. So it's just going sideways right here. You see it's failing to put in higher swings, a tiny bit higher right there. We need a deeper pullback here, and then we'll see. But right now it's just in a bunch of chop. We wouldn't do anything with that. And the indicators aren't telling us we should. You see how it never made it into the oversold? It's suggesting that you don't do anything. Now we'll go to the Russell. And the Russell actually looks the best out of all of them. Okay. This leg length here, this pullback was a little bigger than that pullback, but this leg length was still pretty strong. So because that was so big, a 50% retracement of this will get us right at the midpoint right here, and I think that that's okay. So the Russell could still work out to be something, and the indicators are telling us that. The indicators are saying this could still be a trade. You could still go long. You could still want to go long here. Okay, it's not there yet because it hasn't come out of the oversold. It hasn't hit the midpoint. But if it does pull back and hit the midpoint and gives you an up close, then that would be a trade I'd want to take. Okay, because it's still showing strength. It's not showing weakness. It's still showing strength. So this pullback right here is the beginning of the weakness. It's bigger than that one, and it's bigger than that one. So, let's see. So this right here, when I drew that in, it was at that level, but because it pulled back so deep, I would put it at that level right now. Okay, and this right here, when I drew that in, it was down here. That's still pretty close. That's going to be about right, I think. So the only market that's showing strength on the upside right now is the Russell. Everything else is weak for the upside. It's actually showing a little strength on the downside. This one right here. Now I don't have the midpoint stuff on this, but See, I would expect it's gonna get up to this level right here and then fail. Now, if I put the midpoint back on there, see, our midpoint ended up way down here. So if I go in here on the context and I shut off the MA1 and the BBC, right back to this.
The Russell led the markets to the downside this morning.
Did it?
So the fact that they're turning around, maybe.
Yeah, we'll see. The Russell, look, this is exceeding the strength that I thought it was going to have, right here. But it didn't give us a trade setup either way. We didn't have a trade setup all through that, and we didn't have one here either. So this is at the point where I thought it'd find resistance, and it's not finding it yet. This went right through that level. So, yep. But look what it didn't do. It didn't put in a higher swing. Okay, so if we crunch this all the way up like this, and look at the retracement level, it retraced all the way to here. So, I mean, I'm backfitting the retracement right now. I'm looking for where that could be a 50% retracement from. And, you know, it's not really. So that was, you know, that was a little surprised, but the fact that it didn't continue the trend right here, that's kind of a telling story right now. It didn't give us a trade setup through all of that. It did this one. And we'll see if it exceeds this high right here, this level right here. If this one exceeds this level right here, then it's just a deep pullback, and it's going to take continuation of the uptrend. The Russell was the only one that actually showed like it still had some strength, but you know, it's not quite there. Wow, I didn't take a single trade. I talked through the whole thing. Well, anyway, I think I covered it. Maybe. The pullback to the BBC almost always holds, and what I was trying to show you is how to recognize when it shouldn't hold anymore. Okay, when it's showing weakness in the price action, and you wouldn't expect the pullback to the BBC to hold anymore. And in that case right there, the pullback to the BBC did not hold. It did show the weakness, as I was talking about right there. This pullback to the BBC didn't hold. And it's actually showing the weakness now. It didn't put in the higher swing, and it's got a pullback right here that's just starting to turn things down. So I go back in here. Sorry, Dwayne, I'm talking too much.
Oh, no, I'm in a rush.
Okay, so this is our first actual trade right here. This would be a trade right here on the NQ. And this one here, I would expect to get halfway up this leg length right here. That's all I would expect out of that. All right, but I'm going to wrap it up. I'm not going to take that trade. I'm just going to wrap it up here. If you haven't taken a free trial with us, go here to mytradingiq.com, click on the purple button. There's no credit card required for the trial. Click on that purple button. It's going to bring you to this registration page. Just fill out this page. All right, once you fill it out, make sure you give us your TradingView login ID down here, and you will be sent everything you need to get into the room with us in the morning and to get your indicators indicating on your desktop. Okay, and that is it. With that, we can pass it back out to fabulous Phoenix, Arizona, in Studio A overlooking South Mountain, America's largest city park.
Nate said, thank you for the explanation. That really helped him out.
Good. You know, what we do in here, I mean, is the indicators and all that stuff, but really understanding how to read the markets, you know. But before you take it, Dwayne, let me just, you took it.
Go ahead, take it back. Just take it back.
Okay, I'll take it back for just a minute. Hang on. Yeah. Let me do this, and I'll bring it back here for just a minute.
Yeah, take your time.
Okay, let me just do this. Let me save this first. Let me save this. And do this. And I'll do create new layout. So how long that takes. I did hit it, right? Okay, so let's do test trend. That's what I'll call it. Okay. And now this came up as a Russell, but it doesn't really matter what it is. When you look at the chart like this, without any indicators at all on it, you know, you can see what the market's doing. You can see where it's showing strength and where it's showing weakness. You know, like right here, we're showing a lot of strength all through here, right? And then it stopped showing the strength. When it stopped continuing those leg lengths like this size, it showed weakness right here. And the pullbacks were getting bigger, so you stop thinking that it's going to show strength, and you start looking for the other direction. And right here, it turned down. Then it didn't continue the downtrend, and then it tried to go up right here, but didn't continue the uptrend. So now it's turning down. So this overall is showing a topping pattern. It's called a rounding top, is what it's called. You know, when you have higher highs that turn into lower highs like that, it's a rounding top. And if the bottoms go with it, then it's just a trend change area. And so what you would expect now is this to go down to here, then back up to here, then down to here, and back up to here. You know, you're going to see things, if you mess around with all the indicators, all the free stuff that's out there, you're going to see things, and we have them too. You know, bands like this, and price travels within these bands. Now the bands go like this, but price goes up and down like this inside the bands, right? And as the bands keep moving up, that midpoint of the bands that keeps moving up is going to go down like this, up like this, and like that. And so the idea is to keep you trading with the trend off the midpoint of the pullback. So it's always doing the same thing, always. And you know, at some point you'll just look at this and say, okay, well, this is where it should go back to, like right here. You say, this is where it should go back to, right about here is where that should pull back to. And so that'd be where you'd start looking for an opportunity to get into a trade. Okay. It's at some point, it's just going to jump off the charts at you. That's what we're doing. We're trying to get you to that point. And then the indicators are there to give you more precise entries and tell you exactly where to enter. So you don't look at it like this big blank space like this. Look at it like, okay, it's going to get to this here, and then we're going to look for a down close at this number. So it just brings everything all together. Okay. All right, now I can pass it back out to Fabulous Phoenix, Arizona, in Studio A overlooking South Mountain, America's largest city park.
Alrighty. Okie doke. Recap of the morning session.
Today took 13 minutes and 2 trades to get to $1,475.
Good job.
Thank you. Thank you very much.
All right, guys, we went through every one of the markets in granular fashion, as we do each and every day, with the exception of silver. Again, the vertical line separates today, Tuesday. Here's Monday. But this is not a complete picture because the DT Pro charge did not kick in until 11 o'clock on Sunday night. They actually went a little bit lower. I think we've taken out low out now, especially on silver. So this was the open last night, and we ran right up to the long target. Now the long target, remember, this is Tuesday, this is Sunday night. Monday, back over here is Friday. So that long target was based off this high right here from last Friday. And we hit it pretty much to the tick. Resistance will always send the market looking for support, which it found at the short target. And the short target was based off this low, which was based off this bullish cross. So bullish cross, extended move, price returns to the area where the blue line got above the green line. That's what a bullish cross is. You expect that to be support the first time down, and it was. And then a day later, it comes down again, and it's still support. And there's so much power in that bullish cross and bearish cross. If you take nothing else away from today's broadcast, take that with you. Okay? I don't care what you trade, how you trade it. Well, you need our indicators, but that's another discussion for a different day. So we just consolidated along the short target, and then prior to the Wall Street open, we took a pretty substantial drop. Wall Street opened, we continued lower, and then we recovered. And then we got right here, the black step line crossed red and falling. So we're still waiting to get that retracement to the VBC. pull back holds more often than not, but eventually it'll trade through. We'll see what happens this time. So again, we covered the S in detail and the Dow and the Russell and the NQ. NQ really looks like it's trying to recover. This is the high of the session, but the high of yesterday is way up here. Crude oil still playing that same game it's been playing all night. From the zone to the VVC, back to the zone. From support to resistance, back to support, back to resistance, back to support, back to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. It's just how markets work. Yep. Now, gold looks like it's ready to make another leg to the downside. However, red and falling has curled up underneath price. And when that happens, that means red and falling could become potential support. Just have to wait it out. One last look at the daily chart. We are well off the high of the low of the session on the ES. But remember, 2 days in a row, we've had resistance at the black step line. Now, when the black step line crosses blue and climbing, that calls for a retracement back to the BVC. That line that I drew in here a couple days ago now is perfectly aligned with the BBC. So if we were to get a mad sell-off into the close, this is going to act like a magnet. But the market is showing surprisingly some strength, at least in the ES right now. Let's go back and look at the ES up close in the 30-minute. Okay, at the beginning of the broadcast, we were questioning, is this candle going to close above? It did. I said, then what we need is a candle to both open and close above the BBC. So we officially have gone from bearish now to bullish. In other words, we're expecting higher prices. But look where the market ran into trouble. See right here where the black step line crossed blue and climbing, turning it into red and falling? It's basically this little double top right here. So at this point, I would expect a retracement back to the BBC and then potentially another leg to the upside. And if we take out these highs, then you got potential resistance here and then at the zone. So with that, I'll tell you this. If you want to become a member and learn just how simple what we do really is, get a hold of Valerie. support@cfrn.net. Or you can call 949-42-EMINI. If you call, you're going to get voicemail. Just leave a message. She'll call you back. Just let her know you're interested in becoming a member. She will send you an info packet via email that explains everything, so you can make a well-informed, intelligent decision as to whether or not what we do is right for you. Once you become a passport holder, you'll get 2 hours of live training every trading day. 9 out of 10 new traders fail because they don't have anyone to teach them how to trade. There's plenty of people that'll sell you indicators, oscillators, algorithms, bots, everything. But what you can't find is somebody who's actually willing to sit down with you and teach you both the art and science of trading. And that really is what sets us apart. Not only do we provide 2 hours of live training every trading day, we also give you private one-on-one mentoring. No extra charge. All you got to do is ask. The strategy you learn, the indicators you use are fluid across all markets, all time frames. Stocks, futures, crypto, Forex, ETF. Well, it doesn't matter. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over again and again. The never-ending cycle. Again, it's just how markets work. As a passport holder, you'll get the Logic 247 alerts around the clock They will help you learn to read a chart if you use them properly. Every evening, typically 5 minutes ahead of the Globex Open, you'll get the concierge trade alerts. Every Monday morning at 6:15 a.m. Eastern, you'll get the weekly trading zones. And every Thursday night at 8 p.m. Eastern, you'll be able to attend the members-only workshop. Last but not least, you get the golden keys that open all the private channels in Telegram. And there's quite a few. Everything a trader needs, all under one roof, one low price. It's a good deal, I checked. Let's wrap it up with our good word for today. Overnight success usually takes many years. Mark 11:24. Whatever things you ask when you pray, believe that you receive them and you will have them. Country music star Randy Travis and his manager, Lib, remember the lean days of his career. All 3,650 of them. For 10 years, Lib did whatever it took to keep her club open long enough for somebody to discover Travis's talent. For his part, Randy just sang his heart out, and when he wasn't singing, he was frying catfish and washing dishes in the kitchen. Yeah, that Randy Travis. And then, out of nowhere, it happened. His break came, and everything seemed to click for him. He had a hit called On the Other Hand, an album contract, a tour offer, and a movie deal. He was hot. Suddenly, everyone seemed to be calling him an overnight success. But Randy recalls it differently. We were turned down more than once by every record label in Nashville. But I'm the kind of one to believe that if you work at something long enough and keep believing, sooner or later, it will happen. Randy Travis went on to become an American music legend, winning 3 Grammys, 7 Dove Awards, and being inducted into the Country Music Hall of Fame. But it didn't come easy. It didn't happen overnight. It happened because he worked hard, remained faithful through the tough times, and trusted God to come through for him. Jesus said, whatever things you ask when you pray, believe that you receive them and you will have them. And here's something you need to keep in mind. It will happen in God's time and on His schedule. Your part is to keep walking by faith, frying the catfish, washing the dishes, and trusting Him to bring it to pass. And that's our good word for today. And speaking of country music and hard work, there is a series on Netflix called Nashville. You may have seen it. You may have scrolled right by it. It's got a lot of seasons and a lot of episodes. We binged the whole thing. It took us about 2 weeks. But I think it's really worth watching. I don't know if it falls into the category of someday I'll watch it again. But it is good. So, if you've never seen it, check it out. It's on Netflix. It's called Nashville. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.